Business. My name is Anthony and I'm your host for Financial Markets. I'm still having a talk with Mr. Mubale Mogalia, who is a team leader at Sanlam Investments, and we are talking the unit trust, aka collective investment schemes. Now, Mr. Mubale, before we went into the break, I promised we would be talking about the intent, but even before we go there, we wanted to know like some examples of investors that you actually receive at Sanlam. Who are the people that actually come to invest in collective investment schemes?
Thanks. So, I would like to draw you back to our mission that we at Sanlam Investments, we view unit trusts as I can call it a crusade, that wherever there are idle funds, at least give us an opportunity to generate income for you. When you look at it like that, you start to see the different types of investors and their objectives. So I'm going to give you a few examples just to paint a picture of the types of investors we've actually dealt with. The easiest one is an individual such as yourself thinking, I need to put some money away. And if I were to stretch that, if you were approaching retirement age at age 60, that category has looked at a unit trust a little bit differently because they are no longer having income coming in on a regular basis. So what some of them have adopted is to invest part of their savings in a unit trust which gives them monthly income. Then they can live off that kind of income. And they're very happy because the funds are safe, as we said, and the cash is readily available when they need it.
Yeah.
We've had some of them, particularly those who have been planning on, say, investing in properties and other investments. We've had conversations with them and asked them, okay, before you invest in any other thing, please look at what kind of return on investment you're getting, how easily accessible is it, and compare it to the unit trust, such that by the time you vote to invest in other assets, you have an appreciation of the opportunity cost.
Yes.
All right? And that has been a great learning for some investors. So retirees, some of the retirees we talked to, some had plans to invest in rentals. Some of them were very convinced with the numbers, so they're still planning, but the unit trust is still serving them well. Then when I look at institutions, we have seen some schools come to us, or even churches.
Okay.
As you are aware, schools get money at the beginning of the term and then they spend it across. But as the money has come in at the beginning of the term, since you're not going to spend it
At once.
let it be generating some interest.
Wow, that's beautiful.
Exactly.
Yes.
Let it be generating some interest as you spend along the way. In fact, some of the experiences we've seen, some schools are even targeting that income can be able to pay for at least half of their normal operating expenses. So they build up some sort of a fund that can pay at least the teachers' salaries, because there was a great learning around COVID, as you understand.
Yeah.
And we don't want to go back to that. But other institutions, SMEs, corporates, if they have some funds that they don't use immediately, they can invest with us.
How about savings? What are they called? Schemes?
Circles.
The circles.
Absolutely. Now, the circles absolutely have been diving into the unit trust and investment clubs.
Okay.
Because for them, their primary mandate is to invest.
Yes.
So they have no choice but to evaluate all available investment opportunities, and they have found that unit trusts provide some sort of value add to them.
Yeah.
So as money is still there before they lend it to their members, it can at least be generating interest, which can be shared out with the members. Of recent, we also saw or dealt with a few other cases, and these are with regard to an unfortunate event of death. We have seen cases where a parent passes on and leaves behind some young children. If they've been working in a company, usually there's some sort of death benefits that are paid out to the family members. And the interest usually is for the children.
Yes.
But sometimes those funds can get misappropriated. And the intent is not delivered to the detriment of the deceased, but also the existing family members, because they have to bear the burden of the children. What we've found is that some investors or some families have chosen to place these funds in the unit trust, and then the income from there on a regular basis goes to take care of the children's expenses, school fees, medical costs, and even upkeep, general upkeep. So we've also seen that it can serve that purpose, because it's a very flexible medium, and it is something that we hadn't thought about, but the investors came to us seeking for a solution, and we thought this is something that can actually work, and this is actually working very, very well.
Wow, interesting. That's like involving everyone who can actually.
Absolutely. That's why we're saying unit trusts for everyone. Everyone should think about it.
Yeah.
Absolutely.
Now let's talk a bit about the intent, like we had said before. Now, of course, we can save all this money and then come and get it and use it for nothing, or we lose it in just the same vein. Now, you as an investment team leader, what do you think? What are some of the intentions people come with, and what would you advise them to have? The intentions that you would advise them to have as they come and invest in collective investment schemes.
So, I think in my conversations with investors, I call them either investors or partners. When I discuss with investors, we all have a desire to be better, naturally. Daily, every day we grow naturally as a human being, and we want to mirror that growth in all other aspects of life. Whether we're planning to get married, or planning to have a family, and planning to build a house. After you've built the first one, maybe people now want to build even a second one. There is that natural desire to be better than we were the previous day. We can all be at various stages of life, but that desire is there. Whether you have a lot of money or you have very little, we all want to move in one direction.
Elon Musk is still waking up to work, despite him being the richest man.
Absolutely. He probably has enough money to live on for lifetime, but there is that in it. And we get satisfaction from growth. Everyone desires to grow. Our thinking is that at different stages of life, different people have different objectives. When you are on the lower end of the pyramid, your primary goals are around how do I generate cash to live on? And I think that is the majority of the population in Uganda. How do I generate cash to live on? As you go up in terms of your wealth, then that changes, because now you have more than enough money to live on. Then you start thinking about other things, charitable causes, helping other family members, participating actively in our religious, institutions, passing on that wealth to your children. So the conversation of objectives can vary depending on your level of wealth. And our thinking is at all those levels in terms of objectives. If you're planning for retirement, look at a unit trust as something that can generate cash for you. If you're planning, you have wealth and you're thinking, what can I leave my children behind that is not complicated? Well, you can leave them some sort of trust fund that can generate income for them as well. So the objectives can also vary depending on your level of wealth, but the planning process can be simplified.
Wow.
Yes.
So you can actually look into you as a person and say, you know what, since I'm of this age and I'm of this wealth, I'm not investing for just myself. I think about other people.
Other people.
Yes.
Yeah.
Now, as a let me say now, speaking from the perspective of young people, young people usually, when they're starting out to work, their intention is not actually to like help other people that much. They want to build, assets and start growing. And usually you will hear people buying land and putting it there, idle land, just there for them to get, money out of it later. Can they also, tap into this investment, the collective investment scheme, and benefit at such an early age?
Absolutely. I think the punch word I would put there is the discipline. I think when we are a little bit younger, we have so many competing interests with the bare minimum of money. And I myself I have been a victim. I know what it means to be 25 years old, and you're straight out of school, and life is exciting. It's very exciting. The question I would say is, to build that discipline is what will probably carry you through. And that's why we've been engaged in universities, talking to students around, as and when you leave the university, please have all these on your plate to think about and start executing slowly. You'll be surprised. You'll be very, 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 very surprised by how much that little money over a long period of time can grow into something that can help you out into the future. So, case in point, you can start to plan for building your house as young as 15 years old with a monthly investment of maybe 50,000, 100,000. Probably by the time you get married, 30 years old, you probably already have a pool that you can deploy into a house to live in and a car to buy. So you don't have to, wait for the large quantum, but you can build it slowly and consistently.
Okay. Now let's look at the returns. Yes, we have invested, and we want our money back, but not in the same, with the same figure.
Absolutely.
So how much are the returns, and how do you calculate these returns over time?
Fantastic. So the question on return, and maybe also to clarify to our investors,
Yes.
a unit trust is just a pool of money. This pool is invested in assets. It is from those assets that the income is generated and passed on to investors.
Yes.
So when you look at the assets that we've invested in, which are the treasury bonds, bills, and fixed deposits, we are able to generate a return of about 10 to 12% per annum. And that return compounds on a monthly basis. What I mean by compounding is the interest you've earned, say, in the month of April, forms part of your capital for the month of May.
Your principal, yes.
And interest as well.
Yeah.
There are very few investment vehicles that provide that type of self-reinvestment kind of mechanism. And people always underestimate that component. Over a short period of time, it might not be that big. But for someone coming out of university or someone still in secondary school, over a 20-year period of investing in unit trust, you will find that the interest you've earned from the interest you've been making will be almost 3-4 times of your actual investment over that time period.
Yes.
Which means that if you've been investing over a 20-year period and you've been contributing, and the sum total says about 10 million, you could find that your assets is about 40 million over that time frame. So we find that reinvestment mechanism is something that is very key, but it is a function of to give your investment time.
So meaning, if I've invested today, my money is going to first gain the first interest.
Yes.
That first interest is going to add to that money to gain the interest of the next period.
Absolutely.
Then that interest keeps on accumulating. And it's being added to,
to your account.
Your account.
Your principal, your capital.
So in other words, I'm seeing that this 10.56%.
Yes.
Is this an annual, monthly, or what is the interest rate period?
It's an annual rate.
It's an annual rate.
Yes.
Okay.
But as you're moving through the year, you will find that the interest that you've already earned is also earning interest. So you find that it is not straight line interest. It is compounding interest. It sort of has some sort of curve in terms of growth. It is not. It's not straight. Yes.
Someone told me that this interest is actually divided like throughout the year.
Absolutely.
In all the months. So if it is 10.56, and then you're going to also talk about how you determine that interest. Is it given by the bank? Is it by you as Sanlam? But someone told me you divide it through the 12 months.
Absolutely.
And then you get that interest for every month,
even
which is keeps on daily. Yes.
On a daily basis.
You now divide it on a daily.
Yes.
And you keep compounding that interest.
Absolutely.
Okay.
Absolutely.
Wow.
So that is how it works.
That's how it works.
And that is why we feel that money should be flowing. My example of Lubiji and River Nile.
Yes.
River Nile flows per second.
Yes.
We believe your money should also be working on a daily basis. That is our intent.
Wow.
Yeah.
Let's talk about the interest rate. Who determines that? Is the central bank involved? Is you as Sanlam? Who sets that interest rate?
Well, in principle, where we've invested determines the interest that we are distributing. So if you find interest rates in the market have substantially gone up, you will find that the new investments we are adding to the pool are coming in with higher interest, which is shared out to the investors. You will see the rates
going up.
Also going up. But the reverse is
so now, just a point in case treasury bonds have that are determined by central bank. So these rates actually influence you as you go to buy these bonds.
Absolutely.
They influence the rate at which you're going to give your customers.
Absolutely. So eventually the market makes, there's always buyers and sellers of securities, and the market will determine where the market rate should be. But we are a participant in the market. We are not the market. But our what keeps the fire burning on us is that investors can draw all their money within a day if they are not happy with the return that we are giving them, isn't it?
Yes.
So our intent or objective to keep these investors engaged, we have to look for the best securities. We have to remain on our toes regularly to make sure that as long as there is very good security that meets the criteria of our investors, we need to have a piece of it for them to benefit.
Are you not out competing the banks and other financial institutions? Because other financial institutions, you keep your money there and find they deduct it. Yet you're saying actually, when I keep my money, for example, in an investment scheme, I'm going to come and find more money.
Absolutely.
And we're seeing a revolution in terms of saving and changing how people see, the bank institutions and stuff like this.
Well, we look at banks as partners. Because I can tell you for sure that if you have managed to save over time, and on top of your savings, we have added or multiplied your asset by 2, and you go out and say buy a piece of land, you can probably use that as collateral to borrow from a bank. Ordinarily, if you don't have any asset, you might find it a bit challenging to actually get a loan, or even the size of the loan.
Okay.
So I would look at this process of unit trust just beyond, who is competing for what at a certain point in time. On our side, we don't give loans. We basically
manage the money. Yeah. So,
but as you get probably a way to become a better banker along the way, you have a better appreciation of interest, a better appreciation of when you borrow, how to behave, how to pay back this money. You have better credit. Yes.
And also I think you contribute to the banks through fixed deposits.
Absolutely.
And also you invest. So it's like you working together, intertwined.
Absolutely.
Wow.
So we are partners in that regard.
Wow. Now let's talk about the taxes involved in this. In Uganda, we always have taxes involved. We have taxes on parking, taxes on what. Now in this case, the unit trust.
Yes.
Are there taxes involved?
So to the end investor, when we generate the interest, we do remit 15% withholding tax on the interest that has been earned. But when we when we invest the money, when you put the money into the pool and we invest it, we get the interest from these securities tax-free. So government, through the income, the tax laws, has provided some sort of tax relief to unit trusts so that they are treated as pass-through vehicles.
Yes.
They are not operating entities. They're just a collection of investors. And what and the underlying assumption is it's just a collection of investors who want to participate in capital markets. As and when they do participate, the interest they earn, that is the only one that would pay 15% withholding.
So meaning by the time they give you your returns,
Yes.
the taxes have already been
Already.
removed. And still that tax doesn't do much harm to your aggregate.
No, it does, of course. More money is better, but
Yes.
in terms of equitability, there are two sides of the coin. Government needs the taxes to ensure that there's infrastructure and other things operating. On the other side, we also need to grow as individuals. So you give what is due to Caesar,
Yes, to Caesar, yes.
and that is yours.
What I don't understand is that government says it waived these taxes on unit trust.
Yes.
But then you're still saying when you go to invest, you incur taxes.
Absolutely.
So meaning unit trusts as themselves are not taxed.
As a fund.
As a fund is not
It's
taxed.
not taxed.
It's just these investments you make that are taxed.
Even when we're investing there, we get the income from there tax-free.
Now where is the tax? Because
So the
yes.
tax kicks in after that income has been made and is being passed on to the individual investor.
Yes.
At that point is where they say, Anthony,
Yes.
10 million
Yes, give
from
us.
this fund,
Yes.
please give us 15%.
Okay, well, that is
But the journey between then and up to that point is
No
all
tax.
tax-free.
okay.
Yes.
Oh, okay. I've not actually got that point because I thought maybe probably when you go to invest that's when. So it's at the end, just at the end, that's when they actually
when,
pay the tax.
So some investors who at the end are not taxable, such as SACCOs,
Oh,
don't pay tax
Okay.
because the person receiving the income is an exempt person. But I'm sure, as Anthony, you pay as you earn
Yes.
on a monthly basis religiously,
yes.
and therefore, when you receive more income, there should be some sort
Some
of
tax. Okay. Now, as we wind up this discussion, we want to see the impact of these collective investment schemes generally on the economy of Uganda. How have these impacted on the economy or GDP as well?
Now, I think, in my opinion, we actually have a long way to go. Imagine what 1 trillion is doing. Imagine if it were 6. Those two numbers mean completely different things.
Yes.
Think about how we've managed to mobilize 1 trillion from Ugandans.
Yes.
And where we're deploying it. Primarily, it's buying government securities, which means government is borrowing from Ugandans. But for government to borrow, that pool has to exist, isn't it?
Yes.
So from an economic perspective, you would think about a bigger pool gives government more ammunition to borrow from. You can find that maybe a lot more money can be mobilized domestically to fund government programs. Secondly, we believe that once we make money active, the cost of money will also decline. In the end, the cost of borrowing, when you go to the bank, you will find that maybe the borrowing rates will decline because there's a lot more money that banks have to deal with.
Yeah.
But when money is relatively scarce, you will find that it is scarce within the banks, and the banks will only want to lend to a select few of the customers.
Yes, and
Not
that creates-
and that creates a higher price
Yes.
because there is scarcity of money.
Right.
So we believe that with unit trust, we can push back in terms of more funds being drawn into the market space, and that cost of borrowing can also come down, which is a tremendous value to all businesses, to individuals, because economies run on credit.
Yes, wow.
Let us be Let us
Thank
be
you.
honest.
Our time is
Yeah.
fast spent, Mr. Mugalia.
Thank you.
I've been talking to Mr. Mugalia. He's a team leader from Sanlam Investments. We've been talking investment, especially in the unit trust. We want to preach this gospel until you believe. And Mr. Mugalia, your parting shots before we go away in about 30 seconds.
Thank you. We are confident that a unit trust is for everyone.
Yes.
Please reach out to us. You can look for us on our social media handles, Sanlam Invest UG. I would repeat, Sanlam Invest UG, and you can reach out to us and have even more detailed conversations beyond unit trust. We consider you as not just investors but also partners in this journey of growth. Thank you.
Wow, thank you very much. And there you have it, ladies and gentlemen. That is it from Mr. Mubale and I. But we are going into a short break. When we return, we have someone from ICEA as well. We are talking investment. Until you believe, we shall not leave you alone. Otherwise, don't go anywhere. We are going to be right back.